tremendous resilience in terms of maintaining and improving performance during this year. The financial year 2024 witnessed continued recovery vis-a-vis the previous fiscal year. Despite macroeconomic and geopolitical headwinds during the last year, the company has continued on its growth trajectory as we maintain an agile and adaptive business model with selective strategies to capture opportunities presented by changing market dynamics. We also saw marked improvement in consumer sentiment. This, coupled with our niche product portfolio and core strength, has enabled us to maintain healthy growth. We have signed licensing agreement for Honeywell air purifiers across 10 countries worldwide and have expanded our distribution agreement to 38 countries across APAC, Middle East, and Africa. Moreover, we have extended the range of home audio products with new SKUs to our Honeywell portfolio. We also strengthened our distribution network domestically and overseas to association with TPV technology for overseas brands in India and with PT Vintan Mas Reseki Nusantara for Honeywell in Indonesia. In line with our strategy to grow the licensing line of business, we recently entered into an agreement with US-based Cyber Power for their Cyber Power brand through a joint venture that is a leading name in gaming hardware and equipment and joins our expanding portfolio of gaming products. The fast-growing esports industry in India presents substantial opportunities, and we will anticipate high demand for this product in the coming quarter. Addition of Cyber Power PC in our portfolio is expected to further enhance profitability. The year gone has been very eventful for us. During this year, we expanded our portfolio with several new brands, including Vikram, Lua, Coloware, Nokia, and Cricut, among others. This covers a broad range of applications from audio entertainment and monitors to connectivity products. Vikram is one of the most popular audio entertainment products in the India market, and while Lua, a UK-based brand, lies in the premium segment for the same market. To fuel our expansion endeavors, we raised 80.10 crores through a preferential issue earlier during the financial year. This is being utilized towards growing our distribution as well as licensing. We have continued to outperform the overall sector and foresee a continued rebound in the coming quarter. Innovative ideation, out-of-box thinking, and foresight in terms of market trend are some of our differentiating strengths at AGM. We shall continue to leverage these strengths to focus on generating sustainable returns for our shareholders. We at Creative have a vibrant team of young and experienced employees and an agile model which enables us to adapt well in advance to changing trends, making us well positioned to seize new opportunities in India. Finally, I would like to thank all of our employees, the sales network, the partners for the resilience, commitment, and dedication shown in FY 2024. At this particular time, I express my personal gratitude to all of them and deeply appreciate their effort and contribution to our overall success. Now I request Mr. Tejas Joshi, Chief
Company, welcome you all to our annual general meeting. I am pleased to walk you all through our consolidated financial performance for FY 2024. In the financial year ended on 31st of March 2024, we reported a consolidated total income of rupees 1,740.91 crores, which is a year-on-year growth of 24.15%. With our extensive network, value-added business model, and niche product portfolio, we were able to effectively navigate through the challenging microeconomic conditions. Strong sales growth driven by EV and FMSG segments, coupled with stable demand for existing and new products, led by Samsung, Cooler Master, Honeywell, and ViewSonic, among others, supported the growth. The EBITDA for the full year stood at rupees 69.22 crores, an increase of 53.42% year-on-year. EBITDA margin also increased to 3.98%, vis-a-vis 3.22% in FY23. Improvement in operational efficiencies and higher contribution from Honeywell brand has led to increase in EBITDA levels. Profit after tax for the year was reported at 48.25 crores, representing a year-on-year rise of 77.08%. Basic EPS for the financial year FY24 was rupees 32.58. Now, turning to our attention to some key ratios. The company's return on equity for FY23-24 was 23.47% as compared to 23.21% for FY22-23. Our net debt to equity ratio this year is 0.33 as compared to 0.70 in FY23. Our ROCE stood at 22.81% in FY23-24 as compared to 20.25% in FY22-23. The board of directors have proposed a dividend of 5%, that is 50 paisa per equity share of face value of rupees 10, each fully paid up of the company for the financial year ended on 31st of March 2024. To fuel our expansion endeavors, we had raised rupees 80.1 crores through a preferential issue of shares and warrants earlier during the financial year. This has been utilized towards growing our distribution as well as licensing business. During the year, we strategically undertook a slump sale of our C-Card division for a consideration of rupees 10 crores. The profit from this was accounted under other income, which has caused a one-time increase in other income during one quarter. This is in terms of our financial performance, which has been in line with our expectations. Finally, I would like to thank all our employees, sales network, partners for their commitment and dedication shown in FY23-24. Personal gratitude I want to express to all for all their efforts and contribution for overall success. Thank you for your attention. I now request Mr.
जेडी किया है उसका भी सेल्स चालू होगा तो उसी से अपना ज्यादा रेवेन्यू आने वाला है फ्रॉम हनीवेल एंड साइबर पावर. थैंक यू.
Thank you, sir. The second speaker schedule is Mr. Satish Shah, who is requested to speak in the AGM. Rajesh, could you check Mr. Satish Shah is available in the AGM or not? Hello.
Yes, Mr. Tejas, I could not see Mr. Satish Shah on board, so in that case, we can move on to the next speaker shareholder.
Could you just check if Mr. Keshav Garg is available in the AGM?
Sure. Give me one moment, sir. Mr. Keshav Garg, we have given you the rights to speak. You can unmute yourself and please proceed with your opinion.
Hello.
So thank you so much for taking time and coming to the shareholders meeting.
So thank you so much. Sir, I have a list of questions also. Should I ask them one by one or should I ask them all together?
However you please, you can take it one by one.
Sure, sir. Yeah, I'll ask them one by one. Sir, what is the outlook for FY25 in terms of top line and bottom line?
Mr. Abhijit will take this question.
Sir, it is very difficult for us to give, we can only give guidance, in terms of top line and bottom line. Okay. We expect that we will be, our top line will be in the range of 1,900 to 2,000 crores consolidated basis for this financial year. And of course, bottom line, we expect that there would be definitely a growth in the range of 20 to 25%. Okay, that is what we are hoping, and we are working very seriously towards that.
Okay. Sir, what is the steady state operating margins or EBITDA margins can we expect in the different divisions that we operate, the licensing, distribution, as well as the enterprise business?
Sir, last year we closed at 3.98 as an EBITDA margin. Okay. It is a blend of distribution and our Honeywell, that is manufacturing business. Okay. So on this time we hope that we will improve the EBITDA margin, and it will be in the range of 4 to 4.25%. And that's the guidance I can give you. Not beyond that.
So this will be for FY25. Sir, I'm just asking on a normalized basis. So it doesn't have to be for a room and FY25 basis. Just on a normalized basis, what kind of margin we earn on the licensing, distribution as well as the enterprise business?
Uh, where if you refer to our segmental reporting, no? Then we have different margins for different businesses. I would also would like to say that we hope and we try to gun in a gross margin of around 40 to 42% in our licensing business, and in the range of 6 to 8% on distribution. I'm talking about gross margins, and that's what we are gunning for this year too.
But 40 to 42% on a manufacturing business gross margin, sir, doesn't make sense. So what kind of EBITDA margin can we expect from this segment?
This is something which question I will not be able to take. You will have to write to us on this, and my IR team will definitely answer all your.
Sure, sir. I'll write it down.
Because
Sir,
otherwise this would be a call and not an AGM. Analyst
okay,
call.
sir. From the call perspective, sir, it distorts the investor confidence in a company and the shareholder confidence in a company when we stop doing con calls when our revenue have declined. Coming to my next question, sir, why did our margins decline as well as the revenue decline in Q1 of FY25? And what percentage of this revenue of the Q1 FY25 came from licensing segment?
Actually, what you're asking is something is there in public domain, sir. Your Q1 results have already been published.
Yeah.
Everything is in public domain. Okay.
Yes. So I'm just asking
To answer your question is that our first quarter, I can hear me out, that the first quarter, ours is a season. So our real numbers pan in the second and third quarter. First quarter is always modest. All right. Up to this stage, okay, sir?
Mr. Garg, I'm sorry to interrupt you. Since there are many speakers registered
Sure,
online.
I'll ask all my questions together and I'll let the management answer.
Yes, because a maximum of 3 minutes is being allotted to all the speaker shareholders.
I'll just ask my remaining questions.
Yeah.
I'll just to a point, sir. Our first quarter has been subdued, as we say that because of the industry standard, sir. But on 300 crores, sir, the remaining 1700 crores, sir, is it possible for the whole year? Sir, my second question would be, what is the scope of margin improvement over the next 2 to 3 years in the licensing segment? I think in distribution segment, 2.5% is the most margin that we can expect. Sir, why have our gross margin for honey? Sir, yeah. Sir, what kind of margins can we expect in the cyber power segments? Should it be in the same line to the Honeywell? Sir, does Honeywell share technology and know-how with us, or it's just the brand name and we manufacture, we do R&D on our own, and we just use the Honeywell brand name? Sir, how do we compete against Bose, Harman in the audio segment, as well as the Eureka Forbes and Philips of the world in the air purifier segments, which have better R&D as well as distribution reach against Honeywell licensing? Sir, what percentage of our business, what is the business of secure connection? Is it only manufacturing or is it something else as well? So similarly, we have guided that secure connection in one of the agenda of the meeting that 250 crore would be the revenue. Sir, but when we look at our 500 crore revenue guidance for Honeywell by 2026, sir, it doesn't make sense because can we expect 100% growth from FY25 to FY26 in the Honeywell secure connection business? Sir, what percentage of Honeywell revenue comes from in-house manufacturing versus outsourcing? Sir, what would be our current capacity and the utilization levels at Secure Connection if it is a manufacturing entity? And what are our capex plans to increase this manufacturing going forward? Sir, please can you highlight how big is the Honeywell structured Honeywell license structured cable segment? Can this become? And who would be our major competitors? Or what would be the market size for the same? Sir, are these structured cable products based on a turnkey projects or are these with service design and maintenance or are these just pure play product and distribution sales? And sir, if these are a kind of a EPC or the turnkey projects, sir, what kind of margins can we expect from these contract going forward? Sir, over the last 5 years, although we are making profits, we have a negative conversion to our CFO. So, please help us understand how can we rely less on external sources of funding and create a positive cash flow for ourselves. Sir, when and how are we planning to improve our working capital efficiency similarly to reduce the reliance on external funding? Sir, our inventories have increased by 60% in FY24. Sir, why is this? Sir, what is the steady state working capital requirement as a percentage of sale can we expect going forward, particularly in the licensing revenue segment of Honeywell and Cyberpower? Sir, how will be the marketing for Cyberpower conducted? Will it be reimbursed by the brand to creative? Sir, when can we expect to recover the 4.6 crore receivables pending for more than 6 months? Sir, why have our advances to suppliers increased from 3.5 times to 60.7 crores? Sir, what is the business of Click Retail Private Limited from whom receivables of 13.5 crores are pending? Sir, who would be our major competitors and customers? Sir, what is the expected IRR that we aim on before embarking on any new brand investment or considering a new brand in the distribution segment? And sir, I think in your con calls you have guided a 20 to 25% revenue growth and 40 to 45% bottom line growth. But sir, in your judgment, based on today, as I think you have guided on a lower 20 to 25% top bottom line growth, and I think 10 to 15% kind of a profit growth. So in your judgment, where do we see our business growing over the next 3 to 5 years? And sir, can we reach a revenue of 2200 crore with Honeywell contributing 500 crores and now 4.5 to 5% PAT margin by FY26? Sir, these were my questions. I hope you can answer me these. Sir, thank you so much and all the best.
Thank you, Mr. Garg. Just to highlight the fact, since there are many speakers registered online, a maximum of 3 minutes is being allotted to all the speaker shareholders. I would request all the speakers to be brief and concise while putting forth their valuable views or queries to save time. Queries should be addressed by the management of the company, and if the same could not be addressed immediately, then esteemed members will be replied on their registered email ID. So, Mr. Tejas, you can decide how exactly you want to reply to these questions, and you can proceed, sir.
Mr. Keshav, thank you so much. Looks like you have studied the company very, very well, and it makes us really happy that shareholders like you are really, really interested into the in-depth working of the company. For the constraint of time, I will try and answer a couple of questions, what I can answer in the next 3 minutes or so. And I would invite you either personally or by email or by a virtual call. In the coming week, we could do a face-to-face meeting or a virtual call to answer all your questions if that's the case. Coming to the first question of the subdued first quarter. Usually in this industry, the second and the third quarter are very good quarters because we are into the consumer business space. So a lot of our business is in that season when the Amazon Big Billion Day sale or the Flipkart sales happens. That's the time. Plus the retail really picks up. So it's a seasonal business. If you will see quarter two results, I'm sure you will not be disappointed. That's the first part. Second, you asked about Honeywell overall. Since we are building up this business, I really think, and if you would have studied other companies who are into contract manufacturing or fabless manufacturing as we are, because we don't own any factories, specification design ideas are us and the factories manufacture them. They all operate between 40-45% gross margin. Since we are expanding our business internationally, currently our manpower, our advertising, and the cost of developing products is high. Over a period of time, we will get economies of scale, and we will get operational leverage, and this will improve drastically. For any product line to stabilize and to be on the top of the mind of the consumer, takes a period of 4 to 5 years if you do all your act well. So currently in the Honeywell case, we are there and we can really expect at least 60 to 80% jump in that business every year. You also asked a question about the structured cabling business. Structured cabling business, the India business should be around 10, total available market of that business should be around 2,000 to 2,200 crores. Dealing is a company which is in the listed space, so if you study their balance sheet, you will come to know. Approximately, they would have done 700 crores in their 1,100 crores turnover last year in the structural cabling space. Then there's another US company called Comsco, which would also have done similar numbers in India. And then there are a lot of other companies in that space. The whole Honeywell business is housed into the subsidiary Secure Connection, which is based out of Hong Kong. Because Honeywell business is not limited just to India. So we hold inventories in Middle East and in China in our own warehouses, third-party warehouses. And from there, we supply to Southeast Asia, Middle East, and Africa from their warehouses. And for India, we get the inventories into the Indian space. You also asked a question about Click Retail. Click Retail is the company which looks after our marketplace because a lot of products for Amazon and Flipkart goes through the marketplace model, and we supply them, and then they put it through sellers back on the market. This is what I could answer in this specific period of time. I would request that if you have time, write an email to Tejas, and if your time permits, we could do a virtual, physical, or thank you so much.
Thank you, Mr.
Thank you, Mr. Garg. Rajesh, could you just see if there are any questions you can ask in the chat box?
No, sir. We do not have any questions from any of the speaker shareholder in the chat box as of now.
Okay, no problem. So we'll just proceed the meeting then.
Sure.
So for the shareholders, now we are opening the e-voting link for next 30 minutes. The members who have not casted their votes during the